Hello and welcome to the Small Business Briefing. I'm Brian Kelly, CEO of the Small Business Association of Michigan.
Hi, everyone. Good afternoon, and thanks for tuning in today. I'm Sarah Miller, Vice President of Marketing and Strategic Communications. I want to take a few seconds to welcome one of our new premium members, Ken Ferris Construction Company, located in Wyoming. They specialize in commercial and medical building remodeling, maintenance, and repairs. So welcome to Ken Ferris Construction and team. All right, Brian, it's been a couple of weeks since we've met here on the briefing. Well, let's talk about some things that unfolded last week. It was the worst week for the stock market all year. What prompted that?
Yeah, we saw some pretty big losses over the week, although all of the major indexes still up for the year. So overall, not a bad year, but definitely a bad week. We had the Dow Jones down 3%, S&P 500 down 4%, and the Nasdaq actually took a 6% loss. And it really was spurred on by the weak jobs report from the previous Friday. And so that jobs report came in at plus 142,000 jobs. It was weaker than was expected. I think that a lot of economists were thinking there would be a bit of a stronger closeout to the summer, those August numbers. But like the earlier parts of the year, it was most heavily weighted in sectors that have a lot of government interaction, which if you take that out of the mix, so like healthcare and education, you take that out of the mix, the regular private sector activity really does look like it's ramping down. So the idea that we really are heading toward a cooling with an increased chance of recession, Federal Reserve definitely going to start lowering interest rates. All of these things have just kind of conspired together to shake the confidence of investors. Now, whether or not there'll be a longer tail to it is a good question. I think investors were really looking for an environment where interest rates would start to be lowered, but you know how investors are. They never seem to be happy. So like now we're at a point where definitely there's no question the Federal Reserve is going to start lowering rates, but there is concern about whether the cooling on the jobs market might turn into a recession and make it more difficult to be successful in the future. So the the jobs report, the one other thing too is that it was the weakest August, so different months, ups and downs, but it was the weakest August since 2017. So just another thing where it just I think did a lot to shake the confidence of folks out there, and more evidence pointing toward that monetary policy that it seemed like for a long time the economy was just kind of defying gravity. But now those jobs numbers, not just last week, but ramping down, and negative revisions to the last 6 months, all kind of paint a picture, and you're seeing it in the returns.
And so the economists at U of M also seem to be reinforcing this idea of cooling. What are they saying we should expect?
Yeah, there's the economists at U of M are the ones that help the state of Michigan do their estimating for revenues. If you think about it, all of the state's revenues are tied to economic activities. Things like income taxes are tied to whether people's incomes are going up or down, or payrolls are growing or shrinking. Sales taxes, how much people are buying, real estate taxes, whether real estate values are going up or down, whether properties are turning over, all those sorts of things. So the economy, really top-notch economists there at the U of M, but they released their report. It's the Research Center in Quantitative Economics. So RSQE, in other words, is the acronym sometimes you'll see in the news. And they're looking at job growth. They're expecting it still to be positive in 24 at 0.8%. So job growth of under 1% next year compared to 1.8%. So a little less than half of 2023. And the and then an expectation of it cooling a little further next year. So they're expecting this year is going to close out pretty weak and then cool more to 0.3%. So it's barely positive. And barely positive, there's margin of error in these things, could turn into to negative as well. But they predict the state will add 36,800 jobs overall this year. And just as a basis of comparison, the previous year it was about 80,000. And then they think that it'll be about just shy of 15,000 in 2025. So very, very modest numbers. 10 million people in Michigan. So you start talking about, 15,900 jobs is the estimate, that's pretty flat. Michigan's unemployment rate, which had been below 4% from February to May, and then has increased kind of steadily, ticked up, not big increases, but just steady small increases to 4.4% in July. They do expect that as the job growth slows, that number will continue to increase and maybe hitting about 4.7 in 2025, which really historically speaking for Michigan is not all that high. It's just that in recent years, we had a pretty long boon here without a recession going back really till 2010. The these sorts of signs are the sort this type of unemployment would not historically be considered all that high, but higher than what we've been used to lately. I just have a quote here I wanted to share with you, though. U of N economists wrote that they, quote, are not hitting the panic button just yet, end quote, in talking about the state's economy. Their outlook has multiple potential interpretations to it. And they said, quote, it paints a challenging picture with some slowing job growth and rising unemployment and hardly any growth in real real disposable incomes, end quote. So they're while they are predicting that things look a little bit tougher, it's not a sort of thing where there's the hand wringing and we're headed toward a recession. It wasn't that sort of mood to the RSQE report this year, but something that I think we started hearing from our members I'd say last winter, late last year, and definitely by early this year, like, hey, everybody's saying the economy's great, but stuff is really getting a lot harder. It's not unusual at all for 6 or 9 months later for it to start showing up in the numbers. We hear it first from our members. This is yet another example of that.
All right, let's switch gears a little bit and talk about the adopt and amend ruling a little bit. We'd previously talked about on this show that the governor and attorney general had asked for some clarification related to those rulings. And there was a response to that ruling by the original plaintiff, Mothering Justice. So can you tell us more about that, Brian?
Yeah, so the Attorney General and the Governor have asked the Supreme Court for clarification. And in this clarification, they're not asking for clarification on the paid sick leave requirements. They're asking for clarification on how minimum wage is supposed to be calculated. It was complex and kind of confusing. They gave 5 different potential interpretations. And basically what they said to the Supreme Court is, look, here's 5 ways that we think this could be interpreted, what you wrote in your decision. But option number 1 is the one that we think that you meant, and unless you tell us otherwise, that's what we're going to do. And I think that option number 1 is how they're going to, and the Supreme Court is going to interpret it. So either by not taking action or by affirming, they will there'll be a decision, I think, pretty soon in terms of at least telling us what the minimum wage increase schedule will be. But just like we have been telling you for a while, that option number 1 was kind of that back of the napkin type math that we did right away that shows it going about to 1250, I think just a little bit under 1250 in February 21st of next year, and then rising up to just a little bit below $15 an hour over 4 years. So that's what I think, absent the legislature making changes, that's what I think will happen. That's what will probably be affirmed. So Governor Attorney General asks this question of the Supreme Court, And then that original plaintiff, Mothering Justice, the one who really brought the suit that resulted in the adopt and amend case, they filed a motion that basically saying that they want the Supreme Court to deny any sort of statement. The I made a copy. I found it kind of fascinating in this is on the political spectrum, this is kind of a far left organization. And so, the Attorney General and the governor, both, on the left side of the political spectrum. But this motion said, through this motion, employers, the real party interest here, suggesting that the governor and Attorney General are just doing doing the bidding of employers or businesses. Through this motion, employers, the real party interests here, have now enlisted the executive branch of state government in their cruel crusade against minimum wage workers. I guess with friends like that, who needs enemies? It was a very, very aggressive motion, which I found to be somewhat puzzling, because what the briefing was doing was asking for, they said there's several interpretations of this, and they were just saying, hey, here's the one that we think, but could you affirm it? And the one that they said was really the most aggressive interpretation. So it didn't appear to me like they were trying to back off an aggressive interpretation, but for whatever reason, an organization that in the past had kind of looked more like an ally really has taken some shots in this briefing with the AG and the governor. So, I think at the end of the day, the Supreme Court will probably either not weigh in or affirm that first option, which goes from around $12.50 up to $15 over the next 4 years, and then that part of it will likely be put to bed. There's several other issues in this adopt and amend case that I think the Supreme Court, or not the Supreme Court, but the legislature might consider taking up. But in terms of the minimum, like backing off on minimum wage increases, I don't think there's really any chance that they'll do that.
And just a reminder that we do have a resource page on our website for all things related to this issue. So the paid sick leave requirements, minimum wage, tipped wage phase out, it's linked right on the homepage of sbm.org. So while we're talking about the Supreme Court, there's two other decisions that we're going to talk about today. The first up is that they denied taking up the income tax question about whether the income tax rate should be increased. Is that the end of this issue now?
Yeah, this really does. It's the end of the road for the issue. So you might remember when SBAM had some success in stopping in the legislature an income tax increase. And so it was in the context of increasing income taxes, the main tax that small businesses pay in their income, to fund large business incentives. And so, of course, we would take a stand against that. We had some good success in stopping in the legislature, and then it was done administratively. So there was a mechanism in the tax code that got reinterpreted by the Attorney General, and so they were able to just increase the rate back up to what it was in the previous year before it was decreased. And so there was a lawsuit filed. In this case, it was by the Mackinac Center and a couple of other plaintiffs. Ultimately, though, as it went through the process, and the Supreme Court declined to take it up, which means that that is the end of the road for that case. And so the income tax rate will stay at 4.25%. So not terribly surprised. I mean, I think I had predicted that this would be the case, which most people did, that the administrative decision to increase the rate would not be halted or stopped by the Supreme Court, and that was affirmed, and I think that that's a done deal. So the income tax rate is and will remain 4.25%.
All right, the other case was related to the pandemic, and they actually turned down hearing this pandemic era case. So tell us why this is significant.
Yeah, this is it's been a lot of years now. It's hard to believe so much time has gone by since that pandemic era. But the Supreme Court basically what they did is they shut the door to businesses seeking to be paid for what they lost when the state put restrictions that harm their sales or maybe even put them out of business. So it was there was a several classifications or types of businesses, industries that were closed down really longer than almost anybody else or restricted longer. And that included gyms, fitness centers, bowling alleys, restaurants, those public facing businesses that had restrictions on them well into the second year after the pandemic. And so this this question before the court was whether or not it was a taking. And a taking means that like if the government can't take something from you unless they compensate. So they can condemn land and take it if they have a public use to for that land, but they have to compensate you for it. And so the question was when the government shut down businesses, did it count as a taking? And the Supreme Court said no, it that they weren't going to take it up to even entertain that question, which essentially affirms that it's not a taking in a kind of roundabout way. And the so the the appeals court um, agreed with that decision. So in this case, by the Supreme Court not taking it up, they're affirming a 2022 case with the appeals court. The only thing I found particularly interesting or surprising on this is that there were the there was a split among the Supreme Court on whether or not this case should be heard. So not whether or not who should win or lose, but even just should we entertain, hear this case, let the plaintiffs make their case and decide based on the facts, or just deny hearing it altogether. It was 5-2. And so if you hear 5-2, you'd think, oh, well, 5-2, you're probably gonna, kind of infer or guess, who are the five and who are the two. And you would probably be wrong if you guessed on that. Actually, it was kind of a strange bedfellows type of a thing. The two that said yes, we should hear it. Justice David Viviano, he's retiring from the court. He'll be leaving the court at the end of this year. And also, and from the right side of the political spectrum. And then a justice nominated by the left side of the political spectrum. The political parties nominate these justices. It's how you know kind of generally where their political alignment is. And it was Richard Bernstein. So it was Viviano and Bernstein that said, no, we should take this up and consider this question, whether or not the government shutting down businesses is a taking, where the government needs to compensate the businesses for the losses caused by those by those shutdowns. However, it wasn't taken up. It's not surprising that it wasn't taken up because the odds are stacked against you. If you sue the government, the odds are stacked against you, and it's just how the rules are made by the government, and so it's hard to win playing under their rules. But it was still an important question to ask, and I think this is probably the end of the cases. I'm not aware of any other cases that are still making their way through the process.
All right, let's switch gears and talk about education. There are some red flags in the M-STEP reading scores that were just released from this previous school year. So fill us in here.
Yeah, the red flag is really around reading and literacy. And it's not just because the scores continue to slide. That's disappointing, but unfortunately it's part of a trend, especially since the pandemic. So kids are really struggling to get back on track. And those who started their school journey during the pandemic are the ones that are really kind of hitting these regular testing periods now, and are finding out that they're further behind than kids in the past. But it's also because there have been substantial, and I do mean very, very substantial resources dollars, money put toward literacy and improving literacy, improving reading scores, and it's just not sinking in yet. And maybe it's too early for those efforts to have produced results, but unfortunately, it's not that they're not going up; they're still going down. So these are the 2024 Michigan Student Test of Educational Progress, MSTEP. The 2024 report would be based on the previous school year. Okay, so it shows that 39.6% of third graders statewide passed the English language arts section of the test. So well less than half. Last year it was 40.9, and then the year before it was 41.6. And the year before that, it was 42.8. So we have successive years of declines. And those declines are with really substantial resources that are put toward it. So and then if you would go back to 2019, so the year before the pandemic, about 45% that were proficient or higher. And that's, obviously 45% is nothing to write home about. It wasn't particularly good then either, but it's kind of decline in the face of substantial investments in early childhood education and literacy efforts are concerning. And they're particularly concerning for us here in Michigan because our population is such that we're not, it's already baked in that our domestic population is likely to shrink. We'll have some growth through immigration, but there are more people that move out of Michigan than in terms of domestic migration between the states. There are more people that die than are born each year in Michigan, and so it's really hard to grow population. We really, from an economic standpoint, we really need as many of our citizens as possible to be ready to compete and win in a 21st century global economy. And if you can't read, then you don't even have a shot at it. So like our economy needs it, but it's also, of course, the right thing to do is to fix whatever this literacy problem is that is leading to the substandard performance of it. It's one of the reasons why we're part of an organization called Launch Michigan, a multi-sector collaborative that has put together a framework that we believe would transform Michigan's education system. Just looked around the world and around the country. What are the best systems? What are the hallmarks for those systems? Let's not invent anything new. Let's do it the way that the successful people are doing it. And it's something that we're pretty determined on it. And when I read these numbers and see the trends, I know that this is, of all the work that we do in the long term, at getting the education system and literacy on track is probably the most important.
All right, let's take a look at today's Data Monday report to close out the show.
All right, so it's been a little while. We've just got a short one here that I want to share with you, and this will give kind of a little bit of color or commentary to our some of the discussion that we had earlier. All right, so I'll just make it a little bigger here. So this is the jobs report. And as you can see, we're coming off a period of very robust jobs report or jobs growth. And you'll see that you don't have to squint your eyes too much before you can see the month by month. So each of those orange pillars is a month, and at 142, it wasn't that long ago. The time right after the pandemic, it went way down. There's a bunch of jobs lost, and then many of them came right back. So that part of the chart is even kind of chopped off. But there was just a hot jobs market that we experienced for quite some time. And but it's been trailing off, and these are the revised numbers. So if we looked at this chart a few months ago, the last several months looked higher than this, but they've revised 6 months worth of numbers downward. And all of a sudden, it looks like a clear downward trend. The other thing that I think has kind of spooked economists or investors as well is that what job growth that we have is disproportionately connected to government services or or services that are heavily supported by government activities. So just the true independent private sector growth is really dropping off. Another reason why I think that, aside from inflation dropping below 3% last month, at least with the CPI measure, um, the but also there's a slight upward trend in unemployment. So you got jobs market cooling off, you got unemployment ticking up, you've got inflation below 3%. You've heard me say many, many times that when the Federal Reserve decides what to do, it's what are they more afraid of, a recession or inflation? Clearly, a recession is a bigger concern now, and that's how we know for certain that interest rate cuts will start this month. The only question is, does it go down? Does this first step, is it by a quarter or a half? I think they'll probably still slow walk it with quarter increments, not half increments. And then I wanted to share just two more slides. This first one is labor force participation. So we have there's two things you'll hear sometimes. Labor force participation is fully recovered from pre-pandemic times. That it depends on what you're looking at. Overall, labor force participation is not too far off pre-pandemic times, but not quite back to what it was. This chart shows you we've had a long, difficult climb back from the very low labor force participation, got down to 60% during the pandemic, and now we're at 62.3%. This is everybody, okay? But the one that has recovered from pre-pandemic times and is actually now higher, looks closer to like what it was 20 years ago, is what you would consider the prime labor force participation, which is that the prime working years 25 to 54. So they look at three kind of 3 decade categories. That's the part when you hear people say that, oh, it's fully recovered from pre-pandemic times, they're looking at this particular segment. As you might imagine, after age 55 and before age 25, labor force participation is much lower. That's why it's less than 63% overall. So like here in Michigan, we feel this a little bit more because our prime working age population is not growing. And so the when you have lower labor force participation among those above age 54, so 55 on up, it hurts in a state that's older than average as Michigan is. So this is I think it's an opportunity for us to just reflect that we have made some good progress in coming back, but we're just not there yet overall. And Michigan's historical reliance on older workers, I think, is put us in a situation where our labor force, this tight labor market, we're going to feel it more than the rest of the country. And that's going to go on for the foreseeable future.
All right, well, thanks, Brian. I do want to mention that we have some owner-to-owner events coming up. Actually, I'm going to just check my computer here real quick. So on the 18th, we'll be in Pontiac for our Oakland region owner-to-owner event. And then we will be in the Houghton region on September 25th and Marquette on September 26th. So you can learn more about these events at sbam.org/events. Hope to see you at one of those in the near future. All right, that's all we have for today. We will be back here next Monday at 3 o'clock. Have a great week.
See you next week.